Welcome back, investors, to Ticker Time News. I'm Adam, and shares of Broadcom, ticker symbol AVGO, received a nice lift after the semiconductor and software company posted its broadest EPS beat in 3 years in its Q1 earnings report. Broadcom also toppled its prior revenue forecast in the quarter and continues to see broad-based strength across its business. Adjusted EPS jumped 27% year over year to $8.39 a share, marking Broadcom's first double-digit beat in 3 quarters and its widest beat in 3 years. Meanwhile, revenue growth continued to impress, expanding by 15.8% year over year to $7.71 billion, Broadcom's sixth straight double-digit growth quarter. Both of Broadcom's segments, semiconductor and software, grew in the quarter as well. Semiconductor saw growth of 20% year over year to $5.9 billion, and software at 5% year over year to $1.8 billion. Oh, and before I forget, beat this crazy market with us by clicking the first link in the description. All right, digging a little deeper into Broadcom's semiconductor sales, networking sales grew 33% year over year to $1.9 billion, driven by robust demand from several hyperscale customers, including Microsoft, Google, and Meta Platforms' Facebook. Another highlight was server storage connectivity, which grew by 32% year over year to $801 million. The growth was driven by cloud customers accelerating their adoption of nearline hard disk drives, or HDDs, which, when employed in large arrays, require storage service and expanders to manage. As a side note, this rapid demand for nearline HDDs bodes really well for major HDD manufacturer Seagate, ticker symbol STX, which has continued to outpace competitor Western Digital, ticker symbol WDC, due to its larger exposure to HDDs. Also, 2 other divisions under semiconductor performed well, including broadband and industrials. Drivers in broadband include pushes by OEM customers like Comcast and AT&T to ramp production of Wi-Fi 6E routers and mobile devices. Industrial growth was fueled by the increasing adoption of factory automation and electric vehicles. Yeah, electric vehicles are playing a big role. There was still a couple of laggers in the quarter. Along with software's growth of just 5%, wireless sales were up only 4% year over year to $2 billion. However, the weak wireless growth was in part expected since Broadcom was lapping difficult comparisons from a year ago where wireless revenues exploded by 52% year over year. Also, Broadcom expects another mild quarter, predicting just mid-single-digit percentage growth in Q2. Still, Q2 is shaping up to be another solid quarter. Broadband expects $7.9 billion in sales, which translates to accelerating growth of 19.5% year over year. Most businesses are expected to deliver similar sales growth year over year. However, server storage connectivity seems to be the exception. Broadcom anticipates a massive leap in revenue growth in Q2 to 55% year over year, led by an acceleration in enterprise and hyperscale demand. Overall, Broadcom delivered another strong quarter, showing the resiliency of demand across its businesses and the consistency of its growth profile. Furthermore, a favorable mix of growth and next-generation products led to another quarter of gross margin expansion in semiconductors. Its margins now sit at an impressive 71%. Playbook on this. There is plenty to like about Broadcom, which continues to find the right balance of meeting demand without flooding the market with supply. For that reason, I continue to like Broadcom for the long term, especially given the high growth industries in which the company has an extensive presence. Well, that's what I think about Broadcom's earnings report. What did you think about them? Their performance? Their guidance? Let me know in the comments below, as your comments really do make these videos so much better. Smash that like button, share this video, and join us as we beat this crazy market by clicking the first link in the description. And if it's your first time watching, click subscribe. Thank you so very much for watching, and I'll see you in the next video.